Hey everybody, and welcome to another episode here at Tribal Trades, the daily show coming at you from the great state of Florida. One hell of a drug. And I do want to welcome you to the channel wherever you are tuning in from around the world. Thanks for watching. Today we're going to talk about what is the market's next move. Bitcoin, where are you heading next, and what is going to create that next move? We're going to talk about that, look at the charts, look at some news. Before we do that, smash the like button. This helps get this channel out to more people and does help support the channel, as does your wonderful comments. Thank you. And those who ask questions there in the comment section, I do get back to those as soon as I'm able to. However, if you want more immediate response or engagement, you can find me in the Discords. Below, there are links and information just in the description of this video. You might need to click the more button. That will pop out there. And there is the Tribal Trades Discord. There's a wait list on that one, but an email address. You can get on the wait list there. And of course, the Stocks with Josh Discord. I am in the Crowned Traders section of the Discord. I have my own channel there where I share education, insights, resources, some of my trade setups, and of course, entertainment, because this is not financial advice. I'm not a financial advisor. This is for education and entertainment purposes only. Are you not entertained? Okay. And so let's jump into some of the news here. And first of all, we talked about a few days ago what can save this bull run. Number one was lower inflation. We just saw that. We saw that come in. Let's tick that off. And I believe that will continue to come down and stay down at those lower levels that the Fed is looking for. It was talking around 2%. I think it was 2.8%. The second thing is rate cuts. Quantitative easing, and we need the end of the tariff war. We need the end of all wars, actually, but the end of the tariff war is something that is going to be pivotal as well. So we've seen 1 out of 4. However, the next possible one is coming up, because in 1 week, or 1 week as of 2 days ago, so of about 5 days, the Fed will decide whether to cut, hike, or keep rates unchanged. Fasten your seatbelts. Now, I believe the chances of them cutting rates is a lot higher than what it was a week or two ago. That doesn't mean that they're going to do it, and the chances of them cutting rates are probably lower still than them keeping rates unchanged. However, we still have today, and we have Monday and Tuesday to see how the markets go leading into that meeting. Now, my personal opinion is now is a pretty good time to cut rates. We have unemployment is up, the markets are down, and inflation is down. That seems like data that would lead to at least another 25 basis point rate cut. Now, if they don't, I don't believe the next meeting is until May or June time, and that could really leave the markets in a tight spot where we have 2 months of unchanged rates, and could lead to some further pain to the downside, especially if these tariff wars continue. And it's possible the Fed want to wait and watch to see how these tariff wars unfold. Everybody does, of course. Now then, of course, you have Quentin here saying every year Bitcoin gives you one more massive correction before sending it. So some people see crisis, I see opportunity. And in 2020, you saw there was 25% drop, 2021, 55, 70, 27, 32, and currently now we're down at about 29% drop every single time. And yet every single time people think it is different. Is this time different? Is this time different for Bitcoin? And I don't believe that it is. I still think we're in a bull run. I still think that Bitcoin can go on a run, and I don't think we're going to capitulate from here down into the 40s or $50,000 range, which would happen, in my opinion, if we did capitulate down from here. So let's look at the price charts. See here for Bitcoin is we are still above the 50-week moving average, sitting at around 75,600. Remember, we are looking for a full candle open, a weekly candle open and close below that level before I would consider that the bull market from a historical perspective would be over. We can certainly, price can come below that. It can wick below that. Gosh, it could come quite low. We could see it come down to the 69,000. And look, I feel and fear that come Wednesday, if there is no rate cut, I think that would be quite a bearish signal for the markets. Like what else do you need to see before you can cut some rates here? But we could see it come down a lot lower, down around these levels down here, down to the 69K. However, if on come Wednesday, and look, it could come down that low before we even get to Wednesday. I mean, look what's happening in the stock markets. That's what we're looking for the downside. I'm looking for a break and a full weekly candle close below that level to consider that it's over. So I don't think it's over at this point here. We've just seen this kind of correction back in May of 2021 and April and June. We saw Bitcoin go down 55%. And so I do believe this is, and I've said this for at least a month or more now, I've said this feels like the April 2021 correction more than anything. And of course, I did warn everybody that if we lost the 90,000 level, that there would be a capitulation event down to these lower levels of the 200 EMA, the 200-day moving average, and quite possibly the 50 EMA on the weekly. What are we looking for to the upside? Well, to the upside, if we were to get a rate cut, I think it would probably most likely mean the bottom for this correction was in, even with further tariffs. And at some point, the market's going to get a little bit immune and the sellers are going to run out as well, by the way. But I would, obviously, this is the key level to break. The 200-day simple moving average sitting currently at 83,600. The 200 EMA on the daily currently sitting at about 85,500. And for those of you who are listening to this, the 50-week moving average to the downside is 75,400, and the 50 EMA on the weekly is sitting currently at around 76,900. Okay, but to the upside, and then we have the 20 EMA on the weekly time frame, which is sitting at about 89,000 at the moment. Of course, we have that range that we want to get back into, sitting that Fibonacci there, sitting at around 90,600. So that's really where we want to get back up into the range. And remember, I've said this before, that we mostly have spent from November through until the last 3 months, of course, 3-4 months, we've mostly been between the $90,000 and the $100,000 range. But we've traded in that range there to there. But we had a couple of deviations there to 108 and one to 109. And this, for me, right now would be a deviation to the downside before we come back into the range. And then if we want to see Bitcoin make a new all-time high, we have to get above this $99,600 level, or this wick here would actually be better. There, 99,425. We need to get above those levels. And if we can get above those levels, then the new all-time high is really baked in for me if we break above that 100. Now, of course, if the tariff wars and quantitative easing and rate cuts all happen fairly quickly, anything can happen. We're very much news-driven cycle at the moment. Now, let's look at the liquidation heat maps, because we're going to follow the yellow brick road. Follow the yellow brick road. We're off to see the wizard, the wonderful Wizard of Oz. And as you can see, look what's happening. These yellow areas above, it's what's being taken out. We got another one here. We have a really bright yellow one here. So it would not surprise me if Bitcoin came up again and tested the 200-day simple moving average there, and I would expect some rejection there. But that seems a very likely scenario from here. We can just pop up and grab that. If I'm the market maker, I'm just going to sneak up and get that. There's millions of dollars there available. As we zoom out to the weekly time frame, we do have that same area of 84, 85, even up to 87. Maybe there's a wick up to that area, but there is still liquidity below at 80,000 and 78,000. They're just in the millions, by the way. And then if we stretch out to the monthly time frame, we do see most of the liquidity is to the upside there, again in the millions, 95,000, 97, all the way up to 100,000. There is a lot of liquidity there above for them, the market makers, to come and get. But it's a 6-month time frame that I really want to look at to the downside. Now, we are going to see this level here still billions, not millions, billions of dollars sitting at 73, 74, and 75 That's right around the 50-week moving average. So that's, I would be very surprised if we didn't come down to these levels in the next 3, 4, 5 days, particularly over the weekend there. We see some of that price action to the downside there, okay? And then, of course, we do have a lot to the upside. More and more is growing here to the upside from 95,000. There's 4 billion there, all the way up to 100,000. There are billions and billions and billions of dollars sitting in there. So even if maybe Bitcoin's all-time high has been put in, let's just say, just hypothetically, the Bitcoin's all-time high is in for this bull run, you can still have a bit of a dead cat bounce rally. That's the same thing that happened in 2021 before we saw a complete capitulation, that we could come up and just snag all of this liquidity that is there. And look, there is more of it all the way up to $109,000. So it'll be very interesting there. Again, if I'm the market maker, I'm coming and grabbing this last little bit of liquidity there. Look, there is some more down there at 64. I'm not sure we want to go down there, though. That would be fairly severe and could likely lead to the end of the bull run, and then this would get tagged at a much later time. But like I said, there is just so much pooled to the upside. It would, my move as the market maker is go down and get that 73, 74, 75, and then tag it on the way up. However, the market makers might think, well, that's just too obvious. Let's leave that behind and get it in the bear market, and let's just send this thing up, especially if we get some rate cuts, and the market does need those rate cuts. It really, really does need those rate cuts for the market. And if we equivalate to what we saw on the liquidation heat maps here, this is the area here where there is a ton of liquidity here to the downside that I think would most likely get taken at some point. If not now, then later in the bear market there. And of course, these are the areas to the upside. We saw all this liquidity, short-term liquidity up in these areas here between 83 and 85. And so we could get some more rejection here. Even a nice break above and sit in this area here between the 200 EMA on the daily and the 200-day moving average would be a good sign. But we desperately need a break back above. We've had a couple of attempts, and just each time we've been rejected at this key level, people are selling off, or market makers are selling off their people, unless there's a bunch of AI bots programmed to run the market, more likely. And then, you do have the 20 EMA on the weekly up there at around that key 89, 90,000 level as well. So really, these are these key levels to the upside: the 200-day, the 200 EMA, and the 20 EMA on the weekly. Those are the three levels that we must break to the upside if we're going to get a continuation of this bull market session. And remember, you can make money on the way down as well as on the way up. These moves to the downside since mid-January all the way to the downside, every week in the Discords, I am doing live sessions on how to make money on the way down so that you can make money in any kind of market at any day. You don't have to wake up and go, right, I'm not making any money today because the market keeps going down. I don't want to buy the dip that keeps dipping. You can say, I can make money today because the market is going down, and you can buy Bitcoin at 94,000 and sell it at 83,000 and make money by opening up a short position on that. It's called a short. You can also open up long positions to the upside or do a spot buy, and you can do a short position using 1x leverage. And we do trainings on it, live sessions where you can interact with me personally. You can raise your hand and you can talk to me. You can ask questions in the chat. We do full live tradings with me as well as all the teachings and the educations there. You can get all of that information in the Discords. All that information is below there because we want to be traders that can trade whatever the market throws at us. And if we do go straight down into a bear market, if you haven't learned how to short the market, you won't be making any more money or very little money in this market because there'll be those little pumps in between that we see, these little moves to the upside there. And so I would encourage you to learn how to short the market, because if we do go into a bear market from here and we continue to the downside, there can be some generational wealth that can be made as the market dumps and as it goes lower. So at the click of a button, you can be a trader who makes money in an up market in a down market or in a sideways market, you can make money. We can teach you how to do that in the Discords. Join me in there. Until the next episode, happy trading.